Hey guys, what is going on? Welcome into the video. So in this video, I'm going over the top 3 stocks that I'm looking to play this week. I'm also going to be going over the overall market in general, my predictions of what's going to happen, and just my plan going forward in this very volatile market right now. In this past week, my dog actually ended up eating my camera charger, so I haven't been able to use my camera, and I've just been doing these voiceovers. So hopefully by next week, everything will be back to normal with the regular camera. Alright, so anyways, taking a look at the SPY, this tracks the S&P 500, which I have on the screen, the SPY. So taking a look at the recent price action, we got a pullback right to that support trend line on the rising wedge. Now this is a very make or break level for the overall market. At the end of the day on Friday, the market did end up dropping below this trend line, but if we can bounce back within that on Monday or earlier in the week, we could see a very big bounce in the overall market. But if it does kind of start breaking below this trend line overall, I think we could see a pullback on the SPY back to 375, back to 370, within that range. I would not be surprised if that happens. So it's at a very important level right now to hold this rising wedge and just see what happens. And it's very important to know how to trade single stocks, but you got to be looking at the overall macro market, and that will kind of judge the direction, is if these stocks bounce back or if they keep on going down. That's very important to know overall. Okay, so real quick, let's talk about what I'm doing in the stock market right now. So first off, everybody talks about buying these stock market dips. Everybody talks about buying these pullbacks, buying these stocks on discounts. But what I'm seeing right now is everybody panic selling, everybody calling for a crash. Now, in my opinion, very, very unlikely we get any type of crash. Now, what I'm doing right now, I'm buying consistently on every day that the stock market is red. I'm buying stocks consistently that I like for the mid/long term. Now, this can be anywhere from a couple months to a couple years, however long you like the stock, or just based on price action. But you got to be taking advantage of these dips because they do not come all the time, and this market could very easily bounce back at any time and just continue the bull run that we've been on. Now, is it a possibility that we see massive pullback that lasts months? That's always a possibility. In my opinion, there's not enough negative catalysts to make this happen. Now take a look at each dip that I pointed out that has happened recently. I promise you nobody who is buying on these dips regret buying on these dips. One of my biggest recommendations is always leave cash on the sidelines to average in. Never go all into one of these stocks, especially in a red market. But if you slowly average in, this kind of helps you psychologically. You kind of root for the stocks to go down even more because you have more cash on the sidelines ready to deploy. Slowly be averaging in on these red days, and you will be greatly rewarded when the stock market bounces back, whether that happens tomorrow or whether that happens a couple weeks or a couple months from now. The stock market will bounce back. The stock market will not go down for much longer. And historically, the stock market always goes up. These small little dips are just a blip on the radar in the overall picture, and buying up these dips, buying up on any major dips, some of these stocks are crashing 50% right now. Huge opportunities if you like these stocks and if you expect a big bounce. Massive opportunities to be getting in a lot of these positions, and you're going to regret not buying on these dips if you're patient. Now, this is different with trading, of course. Respect those stop losses, be careful, manage your risk, but buying slowly for these stocks you like for the mid/long term is the best advice I can give you. And of course, I'm not a financial advisor. This is just my personal thoughts and what I'm doing. And I'm planning on having a video out on the top stocks that I'm buying for these long-term positions that I'm buying up on these dips. That should be out later in the week. Alright, so now let's take a look at last week's picks, how they performed, and then we'll get into this week's top 3 stock picks that I'm looking to play this week. Alright, so I'm not going to lie, it was a pretty rough week overall for the top 3 stock picks. All losers, but this is why I talk about respecting those stop losses, having that stop loss under the support levels, always. Alright, so the first pick from last week was Sunworks, ticker symbol SUNW. We talked about this one was oversold, was looking for the breakout out of the descending triangle. This one broke below support. This was a stop loss play when it broke that $15 support. You always got to have these stop losses in, like I always talk about. Always have these stop losses in on any short-term play you have, just in case something like this happens. It was heavily oversold. The market sold off more, so this one got sold off more as well, and it did have more downside once it broke that $15 support. In any trade, guys, the most important thing is risk management and respecting your stop loss. Next up last week, we talked about Fubo TV, ticker symbol FUBO. We talked about this one as a possible falling wedge breakout candidate if it held that $40 support level. Of course, stop loss was under that $40 support, like I was talking about, and it ended up breaking below that $40 support. This is a stock that I like, and we could see a slight run up from here up to that earnings date, which is expected to be on March 2nd. So we could see a slight run up and bounce from here, but I am still holding a core long position. But when that $40 support broke, the stop loss hit on the short-term position that I was in. Next up, we talked about Isun Incorporated, ticker symbol ISUN. Heavily shorted stock, was sitting right at support level. It did end up breaking that $15 support, so this is another stop loss play. But this is one that I'm watching very closely for when it does break back above that $15 level. I think we see a very, very big move. It's a very small market cap stock, very small float. And when this does start running, I think we get a short squeeze and a huge run. So this is one that I'm just watching closely for a re-entry. When it does break back above that $15 level and hold, that's when I'll look to get back in. I think this goes on a big run when that happens. But for now, I'm staying away until it reclaims that key level at $15. Alright, so now getting into the top stocks for this week that I'm looking to play. First off is Osprey Technology Acquisition Corp, ticker symbol SFTW. This is a SPAC play, and the good thing first of all about these plays is with SPACs, most of these SPACs have that $10 floor, so they will not drop below $10 pre-merger. So absolute worst downside scenario, it's sitting at $11.67 right now. Absolutely worst downside scenario if everything falls apart, this stock goes to $10, but that is very, very unlikely to happen. And so going ahead and taking a look at the technicals on this stock, we can see it followed the regular SPAC pattern that most of these SPACs follow. Once we get the deal announcement, it goes on a big run. After the big run, it actually hit $17. After hitting 17, we saw the usual pullback that most of these SPACs have after the initial hype run. So we saw that pullback, and now it had a massive pullback, and now sitting at down at $11.67. And this is a space company. Now the thing that I love about space companies right now, a lot of these plays are pulling back, and there's a huge catalyst coming up about the new ARK ETF. So the new ARK ETF is expected to be announced what companies they're buying. This is expected to be happening in March. Now a lot of these plays are pulling back. When that ETF is announced and when their holdings are announced, I see these space stocks going on a huge run. This is a massive catalyst for a lot of these plays. And space stocks as a whole, they trade at a huge premium. We're going to take a look at the business model of SFTW, which is going to be merging with Blacksky, the company. We're going to take a look at that in just a second, but real quick, let's take a look at these space stocks and the valuations and stock prices that they go on these big runs. So first off, Virgin Galactic, ticker symbol SPCE. This stock recently went from the low 20s all the way to a high of above $60, and now it's back at about the mid $30 level. It's trading right at $37. So my point of showing you guys this is just space stocks trade for a big premium, and a lot of these space stocks are getting to valuations which are very, very attractive, especially with that new ARK ETF as a catalyst coming up. I think these space stocks go on a huge run once again. A couple others, this one's a SPAC, SRAC. This is the merger with Momentus. This is another one that I see going on a big run. Very nice pullback here, and obviously was trading for a huge valuation in the high 20s. Very healthy pullback back to the $16 level. Very attractive for an entry here. And the last one I'm going to be talking about is HOL. This is the merger with Astra. So this is one that recently was sitting at a high of the low 20s. It's sitting at a high of $22. Recently pulled back down back to that $14 level. And after hours is starting to go on a big move after getting news of a contract that they got. So this is another one that I see going on a big run, especially when ARK announced that ETF. This one's also lower float. So I do expect this one to run up this week as long as the stock market doesn't keep dumping. We'll see, but this is one that I'm liking a lot here as well for the space sector plays. And out of all of these space plays right now, I think SFTW is the best valuation and the best risk reward overall. So let's go ahead and take a look at the business model of this company and what they do. So this is a SPAC merger. It's merging with Blacksky. It's expected to trade under the ticker symbol BKSY when the deal closes, which is expected to be in July. So what Blacksky does, it operates a constellation of small imaging satellites that circle the Earth at high revisit rates. It also collects data from other organizations' satellites and from open sources of information. The company uses AI intelligence and machine learning software to turn the data into actionable insights. It currently has about 5 satellites in orbit and plans to deploy 25 more over the next several years. So this is a very small company as of right now and does have potential for a lot of growth in front of it. But overall, this is more of a play on the risk reward towards the space sector. Like I was saying, I think this is the best risk reward play in the space sector space. And at the same time, this has huge upside for when that catalyst does come of the new ARK ETF, which is expected to be arkx of the space sector. Whenever the holdings in that ETF get announced, like I was saying, is expected to be in March, I think all of these space stocks take off. And I mean, it does depend if these space stocks end up being in this ETF, but SFTW is one that is very likely, along with the others like I was showing earlier in the video. And with these SPACs, it is very important to take a look at the valuation, make sure you're not getting screwed over. Kind of like we saw with CCIV, a lot of those investors got screwed over because a lot of investors and traders were betting on a valuation that CCIV ended up being way over for Lucid Motors. So very important to know that. And for this merger with SFTW, this is expected to be sitting at a $1.5 billion valuation at that $10 pipe price. So as of right now, it's pretty much trading at a $1.7 to $1.8 billion valuation, which is more than fair in my personal opinion for this company. Okay, so a couple of business models that Blacksky has is it detects key objects in critical locations such as ports, airports, and construction sites. They also have the tip and queue business model, which leverages machine learning, AI, and natural language processing to detect meaningful signals, send alerts, and/or automatic tips. And they also do virtual constellation, which is access to third-party imaging and SAR satellites, integrated for marketplace tasking and order management of optical and SAR imagery. And the industries that they're in include government defense and intelligence, commercial construction and industrial, and climate and environment and catastrophe. And on their investor presentation, they kind of sell themselves as being the jack of all trades. They're in the new space technologies, they're in the next generation data and analytics space, and they're also within these legacy space companies. Now, you can look at this and say that they're just self-promoting. They're looking at themselves as being better than all these other companies, which any other company should do. But it is interesting, and we could definitely see a lot of hype just from excitement around this company and what they're doing and all the potential spaces that they will be in the future. And they also have some relationships with some key customers, and if things play out the right way, they have a total contract value potential of $630 million plus with these customers, and just trading at that $1.7 billion valuation we were talking about, there's a lot of room for the stock price to go up on hype and these potential deals, if any deals are announced, kind of like we're seeing with HOL right now, starting to take off after hours because of what we're seeing with that deal and the contract that they just got. Alright, so that's my thesis on SFTW, the best risk-reward play in the space sector as of right now, with that huge upcoming catalyst of the new ARK ETF. Let's get into the next stock. Okay, so the next stock is Agora, ticker symbol API. So this is currently a stock that took off like crazy, hit a high of over $110 per share, and now had a massive pullback, sitting almost down 50% after that big run. Now trading at about $60 right now, which is the key support level, which we'll be looking at in just a second. But this is a play that I like a lot as a technical analysis play, and is also a company that I like for a huge growth opportunity, which we'll be getting to right after looking at the technicals. So let's go ahead and take a look at the setup. So it had that massive pullback down from a high of $114, now sitting right at the $60 support level, which is a key level to hold. And if it needs to hold the $60 level, I'd have the stop loss for a short-term play under the $60 level if it does not bounce off this level, first of all. Now, there are a couple reasons that this $60 support level is so strong, but the first reason is taking a look at this Fibonacci retracement setup. We can see that the 78% retracement level, which is sitting right along that $60 support level as well. We can also take a look at this stock had a gap filled down. It filled that gap right in between that $70 and $60 level, so it filled that gap all the way down, which is a good sign for that support level holding. And we can also take a look at this stock is sitting right at that 50 SMA line. So the 50 simple moving average, this can hold that support. If it can reverse off that level, it is huge. There's so many support factors supporting that $60 will hold. Now, of course, if it does break, that would be an immediate stop loss, waiting for a re-entry when it does end up finding the next support. So let's go ahead and take a look at what this company does and what the upside is with this stock. So Agora is the software behind the huge new social media app taking off, which is Clubhouse. Now, Clubhouse is getting a ton of hype behind it, having people like Elon Musk, Mark Zuckerberg on there, just getting a ton of hype overall, and it's growing like crazy. It's still in the phase where it's not open to the public yet, but this has the potential to take off massively when the public does have full access to Clubhouse. Now, a couple notes about this. According to investor Justin Kalbeck, Clubhouse was built in just 1 week on Agora. This just adds to the software of what Agora is and how well the company is. They also had earnings recently that they actually beat massively on earnings. Now, of course, it did not reach the super high expectations at the stock price over $100, so that was expected for the pullback. But right now at $60 at this much lower valuation of where it's sitting, the growth potential and especially the backing of Clubhouse, the hype behind that, it has massive potential. And taking a look at how this company makes their money is they charge on a per usage basis. So the more these companies get big, such as they have deals with Clubhouse, they have deals with Unity, the faster these other companies grow, the more money that Agora will make. So this company overall, massive opportunity for a mid/longer term play, playing Clubhouse, playing the hype and the growth potential of Agora itself, And also on the short-term technical setup, sitting right at that support level, is oversold right here. We could see a very nice bounce off this level. So that's my thesis on Agora, ticker symbol API. Let's get into the next stock. Alright, so the next stock I'm going to be talking about is CRISPR Therapeutics, ticker symbol CRSP. So this is a company, it's in the genomic space. Cathie Wood is heavily backing this company, and she said before that she expects these big genomics company to kind of become the next overall tech giants. Not that they're in the tech space, but she expects these stocks to become some of the largest companies in the world that are in the gene editing and genomics space. Now, CRISPR Therapeutics, this is one of the largest companies in the space overall. She said that she predicts this stock to be a 500 billion market cap in the future. Now, that's a pretty far reach, but she's had some crazy predictions about Tesla that has paid off. And this would obviously be a longer term play if you got in this stock, but it also does have a pretty solid short term setup that we're going to take a look at. So let's go ahead and take a look at that. Alright, so taking a look, we can see the stock is heavily beat down from having a high of over $220. It's now down almost 50%, down to $125 per share. It was in a very bearish pattern not long ago of a head and shoulders, and ended up breaking down and out of that head and shoulders. So we're past that head and shoulders formation, we completed that, and we broke down out of that. So that's good that that's passed. We are now nearing support. This stock is heavily oversold on the yearly chart. As you can see on the RSI, it's in the mid-20s, indicating oversold, and especially being oversold on the yearly chart. That is a pretty strong signal that is due for a reversal after being so oversold. And overall, this is a stock that I think the demand will be there. I think genomics hype will be back overall. All the genomics stocks have been selling off, but when the hype does come back, which is bound to happen in my personal opinion, when we do see a slight market bounce, when we see a reversal in these genomics plays, I'll be looking for a breakout out of this descending trend line on CRISPR. And when it finally breaks this long-term downtrend and breaks out of this level, I think we see a big move, and I think we see a move very quickly back to 150 to 160. Very, very quickly. This could happen in a 1 week time span or so. So I think we see a big reversal very, very soon. As of a short-term trade, this is one that I would be looking to slowly average in on, because as of right now, it is a falling knife, and the first support level is at $110 per share. So I'll be watching for that support level, averaging in heavier if it does drop more, but I do expect a bounce at any time, and I'm personally looking to be averaging in pretty heavy on this stock, as I expect a very big reversal, and I think we see 150 to 160 very, very soon on this reversal. Okay, so there you have it, the top 3 stocks I'm looking to play this week. If you're interested in joining the private Discord chat, that should be the first link in the description. If you want to get free stocks on Webull, free money on Coinbase or Acorn Investings, those links are down below as well. And overall, make sure to trade smart this week, guys. Make sure to stay risk managed with any short-term plays. And also, do not be scared of dips for these mid/longer-term trades that you're leveling the valuations on. Do not be scared of dips. Do not be scared of market pullbacks. Just look at the past history, and that should give you some confidence overall. So make sure to trade smart this week, guys. Good luck to everybody, and let's get rich.